Complexity is the enemy of execution, and this is so true. Rather than investing in 20 different types of ETF, it's always best to choose 3 ETF portfolio for long-term investing. But most importantly, how we could maximize our returns from these 3 ETF portfolio is what we'll discuss in this video. Today we'll discuss how this 3 ETF portfolio, a simple approach, could help you to maximize your return for long-term investing. Before jumping into this video, let me clarify that this is just my own personal journey, and this is what I've done, and this might not fit as per your risk tolerance or your criteria. So please don't follow this approach blindly and seek a professional advice such as wealth planner or financial planner who could give a better advice than me. In my simple 3 ETF portfolio, I've selected few indexes and not ETFs. So you can choose whatever ETF you may like. And a big disclaimer here that none of these fund houses or ETF companies have given me any sort of money to mention their name, such as their ETF names. So this is, I'm just leaving all up to you guys. However, I will highlight few ETF names and their ticker symbols just to see their performance and to dig a little bit deeper in that. So just to clarify this, before investing into these ETFs, I would like to make some assumptions here. And these are the few assumptions which I've created beforehand, and these are just assumptions. So if you're okay with these points, then we could jump into the next steps. My 3 ETF portfolio consists of 3 key factors, and these factors are country specific for growth focus, own the world to average out, diversification for downside protection. Now this is just to simplify your portfolio. It's not a hard and fast rule to follow this pattern. I've created 3 major sections. One which is country specific, the second one is owning the world, and the third one is diversification. Now the first section, which is more for growth focus, so we'll choose country specific indexes such as S&P 500, one of the largest in America, and FTSE 100, which is UK's top 100 companies, Nifty 50, again 50 top companies in India. Or you could choose a thematic fund such as IITU, or if you prefer to choose into defense sector or any other sector, that's all up to you. So this is just not a hard and fast. You can choose only one out of these 3, or you can have 5% allocation into thematic fund as well. Second focus would be owning the world. This is a very critical, guys, to average out your portfolio. You can either choose one index such as developed world index, or you can choose developing world, but in my opinion you can choose just either of these. That would do the job. You don't need to choose both of them. The third section is a dedicated section for diversification. So for downside protection, you can choose either a high yield dividend ETF. This second class would be totally different asset class, such as a gold ETF or a silver ETF or a copper ETF. The third one would be you could choose either bonds, government bonds, gilts, which is popularly known in the UK, gilts, that you can choose. Or if you are more into properties, then you can choose REITs, REITs. Okay, so these are the real estate investment ETF. That's a totally different type of ETF. But in gold ETF, we could call it as a commodity. So it's not an ETF, it's a ETC. Actually, that's my mistake. I should have corrected to ETC, gold ETC. It's an exchange traded commodities. So sorry for that. Okay, so this is like how we could choose. So you just need to choose one ETF from each these 3 boxes. So you don't need to choose too many. So this is like just to simplify for you guys. Okay, so let's jump into the main topic. So we'll start with the country specific. Now in this section, you can choose one ETF from your favorite country. Now many of you guys would be a pro-American, and very few would be anti-American. But what I personally think is we should leave emotions aside when investing and think about the growth potential rather than digging into their international politics and local politics. There are advantages of investing in the US market, and because US is world's largest share market. In fact, this US market has proven over the last 30 years that could provide a very good return, a stable return. And not only that, it also provides you a very good advantage of liquidity. Yes, so liquidity is very, very important. That means there are buyers available whenever you sell any of your stocks. So that's why I particularly prefer US stocks. S&P is one of the oldest running indexes we have in the market. So this is just my own personal opinion. So it's all up to you. And this is again not a financial advice. So just to make it clear. Let's see what are the options available for UK investors if you are buying any US based ETFs. So the first option is a very cheaper option, is SPDR S&P 500 UCITS ETF US dollars, and this is accumulation version. So this SPDR ETF tracks S&P 500 index, and S&P 500 index tracks the 500 largest US stocks. The most important factor for this choosing over other is its fee. Their total access ratio, even for UK investors, is just 0.03% per annum. Okay, so which is very less in my opinion compared to normal S&P 500, which is 0.07. And because it's a new ETF, there is no 3 years or 5 years annualized return available. But SPDR is a very big company, so still you can find the liquidity. So this is the thing. The fund size is 6.3 billion, which is quite huge. So always go with the higher AUM, means asset under management, for this particular ETF, which is a very high. 6.3 billion is very high. Okay, and the second one would be Invesco. This is also my favorite. Biggest advantage of this Invesco S&P 500 ETF is it is a currency hedged, and also the total expense ratio is also very less, 0.05. And for the last 3 years annualized return is 10.16, and this is again a very huge fund, 7.3 billion fund size. The third option is Vanguard's very popular VWRP, and this is again very good, decent size, 16 billion, one of the top favorite in any of the platforms you choose, just in case. So VWRP is a accumulating version of S&P 500, and again this is 3 years annualized return is 11.59. The 5 years annualized return is 14.84, which is quite decent, to be honest. So these you can choose. And other names which I wanted to mention, I could not get all the info, is SPXL. That's also a very good ETF. This is a distribution version, and this is again currency hedged, so it's a very good ETF to check out. And you have the another ETF, which is XDPG, X-Trackers S&P 500 accumulating version. And for those who do believe that UK is going to grow in the next 10 years plus, then you can choose this option, which is CUKX. 3 years annualized return is 11.68, whereas 5 years annualized return is 9.69, which isn't too bad. The volatility is also very less, it's 9.69, and you get the home advantage of GBP. You're buying essentially in GBP. And these are the top 100 companies in the UK, and most of them are paying a very good dividend as well. So even you can check out for dividend options as well if you would want to go with the dividend option, distribution version. This is the accumulation version, and the fund size is also decent, 2.3 billion, which is quite huge. And the total expense ratio for this particular ETF is very less, it's 0.07. you guys will get the home advantage. But I personally think that the expense ratio should be just 0.02% or 0.03%, to be honest. So this is me, but again, iShares by BlackRock, it is a very huge company. Okay, and if you feel that China is going to be the next future, or it's going to grow in the next 10 or 15 years plus, then you can see the Chinese version as well. So I'll highlight a few of their Chinese ETF names. I personally think that in the next 15 years plus, Indian companies will grow exponentially, and by 2050, India will become world's second largest economy after China. Well, let me tell you that India is world's largest economy and also one of the fastest growing economy by GDP, and is well ahead of UK, France and Italy. And GDP value, you could refer this link. I'll put a link into this description so you can read it further. I have researched a few indexes for my UK investors, and after researching, this one is one of my favorite, a mix of large and mid cap companies in India. So the option is Franklin Templeton FTSE India ETF, and this is an accumulation version. Ticker symbol for this ETF is FRIN, and the index this particular ETF tracks is FTSE India 30/18 capped index. So when we look at index, this is a mixture of large and mid cap companies, and this is domiciled in Ireland. The expense ratio is a bit higher side, so it's 0.19% per annum, and 3 years annualized return is 8.69%, whereas 5% annualized return is 10.94%. So you can choose a one particular ETF, I mean one index from your favorite country, and make sure that you choose a country which is going to grow in the next 15 years, because you will be investing for the long term, so you don't need to manually adjust your ETF. So this is the way you could choose your one ETF from the one section. Sometimes you think that after choosing one particular country's growth ETF, let me allocate 5% into a thematic fund. So you might choose IT related companies, and you might think that no, defense is going to grow because of this ongoing war. So you could choose that as well, but make sure whatever thematic fund you choose, your stock allocation should not overlap too much. If it is overlapping the same index which you've already chosen, that means you are paying more fees. In this section, we'll choose one ETF from a well-known global indexes. As I've discussed earlier, before talking about ticker symbols and ETF names, we should understand what underlying index that particular ETF tracks. For any global ETFs, there are two major indexes. One such index is FTSE All World, and the second one is MSCI All Country World Index. FTSE All World Index tracks stocks from developed and emerging countries worldwide, whereas the MSCI All Country World Index ACWI tracks large and mid cap stocks from 23 developed and 24 emerging markets worldwide. Some of the popular ETFs are Vanguard's FTSE All World ETF. Accumulating version is VWRP, whereas the distribution version is VWRL. So these particular index tracks stocks from developed and emerging countries worldwide. The fund size is quite huge. It's 14.6 billion GBP. Total expense ratio is 0.22% per annum. This is again a full replication. The fund currency is unfortunately USA, but there are UK versions as well, GB versions as well. And the last 3 years annualized return is 12.55. 5 years annualized return is 11.19. This fund is domiciled in Ireland and it's by Vanguard. The second is a bit cheaper option, which is Invesco FTSE All World. Again, this is accumulating, and the ticker symbol for this ETF is FWRG. The only catch is there is no annualized return available because it's relatively a new fund. But again, total expense ratio is just 15.15% per annum. This is also another great option to choose. Now let's jump into that selector. So far we have covered growth ETFs, and we've also covered world ETF. But let me tell you that if you choose Vanguard's VUAG and if you choose VWRP, essentially 40% replication you could see from these two ETFs. So it's always better to choose Vanguard's emerging market ETF, which is VFEG, because VHVG is covering North American companies and developed economies, whereas VFEG is for emerging market. So let's say, for example, if chosen CUKX, which is FTSE 100 companies, and if you think that still there are a few companies are overlapping in my VWRP portfolio or VHVG portfolio, then you could choose VFEG, which is Vanguard's emerging market ETF. And there are a few other options such as ACWI and SCWX. Okay, so this is what we have covered so far. Now the third point is very critical, which is a diversification for downside protection. In the recent market corrections in the technology sector, what we have experienced is all our ETFs were in red zone. But what if we could choose one particular ETF which is totally opposite to technology sector, such as FMCG sector or a defense sector or a high yield dividend ETF? Then there are still possibilities that one ETF could at least average out. In this section, we'll select one particular ETF from any of these asset classes. So for high yield dividend category, I've selected few ETFs for UK investors, which is the one option which I could see is iShares UK Dividend ETF, which is a distribution version, and the ticker symbol for this ETF is IUKD. The ETF is in GBP, so this is the advantage of home currency, and this basically tracks FTSE UK Dividend Plus Index, and the fund size is quite decent, 884 million. The only catch is the total expense ratio, which in my opinion is way higher. When we look at the performance for the last 5 years, annualized return is 8.03, and 3 years annualized return is 8.90. So which is a very good option to diversify your portfolio. Now the second option is Vanguard FTSE All World High Dividend Yield ETF, and this is a accumulating version. The ticker symbol for this particular ETF is VHYG, and for the last 5 years annualized return is very handsome, 14.65. 3 years annualized return is 8.29, and the expense ratio is very less, it's 0.29. In my opinion, this is a very good option, and still there are a few options, so we'll discuss later on. But the fund size is also decent, 4.2 billion, and this is domiciled in Ireland, and this fund's currency is GBP, so you are taking the advantage of home currency. Now one of my friend asked me a very good legit question: Dhaval, what is the difference between Vanguard's VWRL ETF and Vanguard's VHYL ETF? When I checked their performance, then VWRL performed better compared to VHYL for the past few years, Am I right? So what's so hype about VHYL ETF? What's so new about this? Well, the core difference is Vanguard's VWRL tracks FTSE All World Index, whereas Vanguard's VHYL tracks FTSE All World High Dividend Yield companies. So this index is totally different index. The third option for high dividend yield is SPDR, US Dividend Aristocrats, and the ticker symbol for this is USDV. The fund size is quite huge, and this is 2.8 billion GBP, and this fund's currency is in US dollars, and this is domiciled in Ireland, and SPDR tracks S&P High Yield Dividend Aristocrats. Now this means this particular index tracks those American companies where they have increased their dividends every year, and this is what they have been doing for the last 20 years. So this is a very good ETF to have, although the performance for the last 3 years is very less. It's just 4.64%. Not to mention this is domiciled in Ireland, and this is by SPDR. The fourth option is my personal favorite, and that is iShare Edge MSCI USA Quality Factor, and the ticker symbol for this particular ETF is IUQF. MSCI USA Sector Neutral Quality Index tracks the leading stocks in the US market. The constituents are selected by three main equally weighted indicators, and they are high return on equity, low levels of debt, and low year-on-year earnings variability. According to this article, USA Quality Factor has been a very hot topic for the past few years, and this particular index tracks best US companies in the top performing sectors, so it's a positive sign for investors. In fact, when we look at their annualized return for this particular ETF for the last 3 years, 5 years, and even 10 years, then this is very, very good. The last 3 years annualized return is 11.16. Past 5 years annualized return is 18.11, whereas 10 years annualized return is 11.29. The fund currency is in USD. This is domiciled in Ireland, and the fund size is also handsome. It's 1.4 billion, and total expense ratio is also decent, which is 0.20% per annum. And this is by BlackRock iShares. This is one of my favorite ETF, and not a personal advice, but if you think that if you would like to diversify your portfolio, then please check it out further. Do your own due diligence and never blindly listen to any random YouTuber. In this category, investing in precious metals such as gold or silver is another way to diversify your current portfolio, and it provides a very good downside protection during market downturn. Now, someone like me would like to have a diversified portfolio, and in order to make it very simple, diversification, someone would choose a different asset class such as commodities, and one such ETC, not ETF, ETC, exchange traded commodities, is very popular these days, and it's iShare Physical Gold ETC accumulating version, and the ticker symbol for this is SGLN. The total expense for this particular ETF is 0.12% per annum. The fund size is quite huge, is 15.21 billion, and last 5 years annualized return is 13.34. 3 years annualized return is 18.58, and this is domiciled in Ireland, and it's by BlackRock, so well-known name in investing world. So this you could check out further. Now let's discuss government bonds or gilts category. For me personally, this is not a popular choice. However, if someone who's looking for stability and regular income after retirement, then this could be worth looking at. iShares UK Gilts 0 to 5 years ETF in GBP, and this is accumulating version. The ticker symbol for this is IGL5. I've discussed in depth about this particular ETF in one of my other videos, so please do check out that video for more information. So you can choose any one ETF from these three broad categories and you could create your own ETF portfolio. Important disclaimer here, these are few of the popular ETFs and none of these ETF companies or fund houses have given me any sort of money to mention their name, so I'm just leaving this up to you friends. You can create your own portfolio around 3 or maximum 4 ETFs, and remember, complexity is the enemy of execution, and the main purpose of my channel is to simplify investing. If you have enjoyed my today's informative video, then please do like and subscribe to my channel. And once again, thank you for listening.